Just want to get your quick thoughts right off the top on some of the new China tariffs that look to take effect September 1st.
That's right. So we're now expect to see Chinese tariffs on U.S. cars, on U.S. agricultural exports. This is the type of downside risk that the Federal Reserve was concerned about. They were looking not at the economic fundamentals when they cut rates in July, but saying that there are downside risks to the U.S. economy from potential retaliation from China, for example. So this is why they cut rates in July, and this is why I would expect to see another rate cut in September when the FOMC meets next.
Gus, the markets are clearly not liking this news from China this morning. How much risk to the downside is there as a result of these tariffs?
Well, it's not like the risk has increased. We knew that this was out there. We were expecting China to retaliate. The question now is, does the U.S. retaliate again? Do we see further retaliation from the Chinese and so forth? And so I think that, there is the potential there for even further actions by both the United States and China that would weigh significantly on U.S. economic growth. So the Fed is likely to cut again in September. Chair Powell is likely to emphasize the downside risks in his speech this morning and indicate that another rate cut and perhaps a few more rate cuts are actually coming in the near term.
Gus, you think this trade war is just simply getting out of hand here at this point?
Well, I think it's been slowly building since earlier this year. And, this is what happens. You have actions by the United States. You have actions by China, tit for tat retaliation, and it starts to add up. And so the concern was not the initial rounds of tariffs, but the implications and the possibility for retaliation. We're seeing that happening now, and that is going to have a significant impact on U.S. growth, on Chinese growth, and global economic growth.
Isn't Jay Powell backed up against the wall here? He has to come out today in Jackson Hole and pretty much say or signal that rate cuts are coming. Not just one rate cut, potentially several more.
That's right. But I think the Fed has been doing that. They've been talking about how they're looking at the data. They've been talking about the downside risks and the potential for further rate cuts if necessary. So I think the Fed has given themselves some flexibility here. I think that Chair Powell will try to emphasize that flexibility, not indicate that a rate cut is definitely coming, but emphasize again that the risks are weighted to the downside. But the Fed does have some flexibility to cut rates further if they feel that's necessary. And I think that's likely to be the case later this year.
Gus, back to the trade news real quickly this morning. Do you think this is a type of news that pushes us into a recession?
I don't think that this is enough to push us into recession, but I think it's the accumulation of things. So perhaps we see further retaliation from the United States and additional retaliation from China after that. Perhaps this leads to a more significant slowing in global economic growth. So it's not the individual aspects of this, it's the accumulation. But certainly when you have a U.S. economy that is facing slower growth, when you have a global economy that is facing slower growth, these types of actions don't help. And you could get some sort of additional shock that could be the straw that breaks the camel's back and finally pushes the U.S. economy into recession.